أستاذ عمر.
السلام عليكم. يعطيكم العافية. دائما أصعب سيشن هو السيشن اللي بعد الغداء، لكن إن شاء الله أنه يكون مليء بالدراهم والفلوس ويخليكم اكسايتد إن شاء الله. جلسة اليوم حتكون بالإنجليزي إن شاء الله. فاي هاف تو شيفت انتو انجلش، لكن الترانزليشن حسب ما فهمت من الإخوان is available if you want it.
موجود في الخلف.
موجود في الخلف، نعم. So the digital investment landscape in MENA has evolved rapidly in the past 6 years. From a handful of funds in 2009, we were having a couple of funds, if I recall, and the entrepreneurs from that period might remember that we used to knock doors into 2 or 3 offices to get some funding rounds. Today, we have more than 50 funding institutes across the region in 2015. In the past 3 years alone, as we have seen from the great presentation by Omar, more than $700 million have been invested in over 400 deals across the region. Today's session hosts a number of the leading investors in the region who will discuss the state and challenges of investment in the region as well as the vertical that they are focusing on. First, we have Amir Farha. Amir is the co-founder and managing partner of Pico Capital. Amir is the co-founder and managing partner at Pico Capital, a venture capital firm that provides early stage growth capital and hands-on operational support for technology companies in the MENA region with a focus on the GCC. If you have a company, you should talk to this guy after the session. Second guest is Namiq Zarbi. تفضل. نامق يستاهل a special round of applause. This is his first time in Saudi. Hopefully it's not going to be the last one, inshallah. He's the managing partner of Silicon Badia. Namiq is the founder and managing partner at Silicon Badia, a group of ventures capital funds based in Jordan and New York City. Across its various vehicles, Silicon Badia invests in entrepreneurs who are building the next generation of disruptive tech-enabled companies in the Middle East and the US. Namiq started his career building technology platforms on Wall Street and then went on to become the founding principal of an early-stage venture capital fund in New York City. He graduated Phi Beta Kappa with honors. Is that correct? Sure?
Take it.
Yeah? We need a certificate.
Long time ago, but we'll take it.
And distinction from Carnegie Mellon University, and currently resides between New York City and Amman. Welcome, Namiq. Our third speaker will be Pavel Chernitiv. Welcome, Pavel. A round of applause for Pavel. Did I say it correct? Pavel? Yeah. Partner at AdVentures. Pavel has almost 15 years of experience in venture capital, financial and investment banking industry. He started in 2002 as a consultant at PwC, Moscow Assurance Branch. Pavel later moved on into investment banking role with a leading Russian investment bank, where he was a part of TMT team executing landmark domestic transactions in the sector with a total of value of 15 billion. In 2010, Pavel joined AdVentures as a partner and was instrumental in bringing it into a fully fledged top 3 venture capital firm operating in Russia, with 4 funds and over 25 investments under management. Pavel is overseeing some of the portfolio businesses within Russia, mostly in lead generation, booking, marketplace, and on-demand segments, and is covering an international pipeline and co-investment opportunities. Welcome, Pavel. Our fourth speaker is Walid Hanna. تفضل Walid. Walid is the managing partner in Middle East Venture Partners, MEVP. Walid has been active in venture capital and the new ventures development for the past 17 years. He has founded, co-founded, and invested in and led more than 30 investment companies spanning a range of industries, including technology, consumer finance, hospitality, and others. MEVB currently manages 4 regional funds with assets under management worth of $120 million. Walid holds a Bachelor of Economics from McGill University in Canada and a Master's in Finance from Hutsi Tutis. Is that correct?
I should say in Paris, yes.
Okay. Sorry, my French is not that good. And welcome, Walid. And last but not least, our guest is Noor Swayed. Welcome, Noor. Noor is a partner at Leap Ventures, and she's a managing partner at Leap Ventures, a growth stage venture capital firm based in Dubai and Beirut, and investing in entrepreneurs focused on technology and innovation. She has scaled and exited 2 businesses in the GCC, one via an IPO valued at $1.1 billion, DIBA, and the other by private equity sale, Zinyoga, correct? Noor serves on the board of Colgate American School in Dubai, Sisters, Elevate, and the MIT Enterprise Forum, as well as Endeavor UAE and Nabish, right? Nabish. Noor holds a bachelor degree in finance economics from Boston College, as well as an MBA from MIT Sloan. So, welcome everyone. I really wanted to give your full bio to the audience because I know sometimes we don't read the booklets that got printed and put in our carry-on cases. But I wanted to show you that we have a great panel of great investors talking to you today about investing in the region. So hopefully we'll be adding to you some value. I'll kick off with the challenges. The region is booming in terms of startups and entrepreneurship recently, as we've seen from the recent report from ArabNet and also in general speaking. What is the main challenges you see today of investing in the region? Why we're not seeing more and more investments? What is your personal perspective on why the region is not getting more and more investment? Start with.
So I guess from a local perspective or from international? Are you talking about just generally investment?
General, with a local flavor.
So I think from our perspective, I think the biggest, it's a function of quality of entrepreneurs. I think we've seen a drastic change since when I looked at the startup landscape in 2008 when I first moved back to Dubai. Working with Walid, actually, we had an angel network. If we look at the state of entrepreneurship and entrepreneurs in 2008 to now, we've seen a tremendous growth in quality. And with that, you see a growth in investments, as Omar showed us in the recent presentation. And I think that's really, if I was going to say, for us, one of the drivers is identifying high growth businesses that are trying to solve really local problems. And that's slowly improving, actually quickly improving. And I don't think it's a function of having a lack of investment. I think the lack of investment stems from identifying or finding amazing opportunities. If I was to say the biggest challenge for us as investors in helping companies grow, it's probably access to markets. I think when you invest in a company in, let's say, Dubai or Egypt or even Saudi, getting access to a new market is always a challenge. Finding talent and all these other things that go towards setting up operations and setting in new markets. People think MENA as one big market when it's really a fragmentation of many markets. So, that for me is probably the biggest challenge.
Great. So access to market and finding local talents into these new markets.
Yeah,
Now,
I'll add to what you said about scale. So for us, one of the biggest decision factors when making an investment, and I'm sure everyone on the panel would agree, is the people behind the company, right? Because everyone has fantastic ideas in this room, I have 1 million, but the thing is execution, right? So, we found, having, been investing in the region for 3 years, our partners, or one of our partners for a long time, we found a lot of companies know how to get from, 2, 3, people, the founder and the first employee, to maybe 10, but going from 10 to 100 is where we start seeing a lot of challenges. So for us, it's more on the lack of know-how on how to scale a team and manage a team and build company culture, which is something that not many people look at. And we've done a few big deals this year at companies that are going from 30 to 100, 150 employees, and becoming more organizationally structured per se. And we're finding ourselves wasting a lot of time, on that, because of the inefficiencies created by, having organizational structure. So, and putting the right people in place, and making sure the CEO is talking to this head, but also talking to that head. So, that's one of the challenges we're spending a lot of time working on.
Great, thank you, Naima. So, again, scaling up and moving the team from 10 to 100, I agree with you, that's one of the main obstacles. Pavel, I'd like to hear your thoughts, please.
Yeah, maybe I'm not the best person to answer this question, given that we are quite new to the region. So we started to look at GCC region just in the first half of this year. So far, we've done just one investment, which is UAE based. To be honest, we don't see any sort of strong challenges for the pipeline generation. Maybe the reason for that is that we have a very clear focus in terms, as a fund, in terms of the verticals we invest and the business model we invest. So this really helps us to quickly identify the investment targets and the businesses. But maybe one of the points that we've clearly realized for our first portfolio company is apparently sort of a lack of talent. It's not really a lack, but there are some sort of complications with getting the people on board at the C level, and this is especially relevant for the new regions when the businesses expand out of UAE to the places such as Saudi Arabia, Egypt. Yeah, so that's probably my answer.
Great. So Pavel is new to the region. You have more chances to secure a deal with him other than the other guys and ladies.
Especially if you pitch in Arabic.
Especially if you're so talent, and mainly senior management talent, is what you're seeing as
that's
one of
what
the
we've
challenges.
realized based on our first investment in the region. But again, as we haven't like the strong footprint within our sector and business model approach from say Portugal to down to Europe, Turkey, MENA, India, and Southeastern Asia, Malaysia, Philippines, Singapore, Hong Kong. We're not looking at US and China at all. And India is a tricky thing for us.
Yeah.
Yeah. We more or less understand what the issues are on the demand and the supply side of the consumer businesses. So this kind of expertise helps us to solve the issues when the team is like more or less shaky.
Great. Thank you, Pavel. I'll go to Walid. Walid might be the most experienced investor among, I don't want to say the oldest, but I want to say the most experienced. Walid.
He's the oldest.
He is? I didn't say it, he said it.
Yeah, on this panel, I am the oldest as well.
Walid, from your, mashallah, great experience you have been doing with the region, let's dip deep let's dive deep شوي into where exactly you're seeing the challenges across the last, let's say, 15 years. I'm sure that these challenges evolved, but from working with entrepreneurs and companies, where do you see the bottleneck of not getting good investments?
The, you know, there's a pyramid and there's a lot of deals at this level. We come in at a Series A, but in order for Series A to be successful, the bottom end has to be filled.
The base has to be
The base has to be really, really big. And it is probably big, but in terms of quality deal flow, it's quite poor. So I agree with Pavel with regards to the talent. Unfortunately, the companies that we get are mostly not investment ready, partly because of the poor level of talent. They're inexperienced. The lack of seed capital also on the seed level makes it that those companies are not ready for Series A, or it takes them much longer to become ready for Series A. You know, there are no R&Ds, no in those universities, in the MENA, very, very little R&D. So IP is quite low. We have other challenges, you know, on the payment types of challenges when you want to sell something on an app or online. Telco-related challenges, they do not pay you on time, credit card penetration is quite low, but everything is moving in the right direction. So I just want to say that on a positive note, every metric is going the right way, which is very, very encouraging. I mean, we've seen Omar Christidis' report earlier, and you can see that at least on the investment front, everything is happening. It's the perfect storm, I think. The only missing part again is the R&D centers and the creation of those talent pool. I mean, how many Saudi professionals go to the US to have an education, but how many really stay and work in technology companies before coming back to start their own companies? Very, very little, despite the size of Saudi Arabia. That's just an example. That's probably why we find more and probably better talent in a smaller country like the UAE, even Lebanon and Jordan and Egypt, because all of these young people have experienced or work experience in technology companies, and then they intend to start their own companies. Just by the way, the average age of the entrepreneurs we invest in is 38 years old, 38. This tells you that in order for an entrepreneur to become investment ready, experience is really a must. A college dropout with no experience cannot do much, unfortunately.
That's a very good point, Walid. I think there's a misunderstanding in entrepreneurship about Steve Jobs and Bill Gates and Mark Zuckerberg. These are the three that is up the norm. They are college dropouts, but they managed to, it's up the norm. I mean, 98%, yes, it is the exception. 98%, I think, if I recall the right percentage, or let's say it's a high percentage of successful entrepreneurs. They have MBAs, they have 10 plus years of experience in order for them to launch a successful ventures. You touched in a very good point. We need to have a great base for startups before reaching into Series A. The seed funding is missing in the region, and we also don't have a technology-based culture in the R&D or in the IB and also in universities. Noor, we're saving you to the last, and again, it's the same question. You're a recent venture in the region, so where do you see, but you've been working with the entrepreneurs for a while, and you are an entrepreneur yourself with a couple of great exits. Where do you see the challenges with investments?
So I have to concur with some of my panelists here, and I'll use Wahid's analogy. So we're a little bit higher on the pyramid than MEVP, so if the funnel goes like this, we're finding fewer and fewer. I mean, globally though, only 2% of companies make it to Series B, so you can really tell how steep that pyramid is. One of the nicest things I heard in the hall next door on entrepreneurship was one of the gentlemen pitching said that their team are all second-time entrepreneurs. Now, whether or not you exit or you fail on your first venture, being a second-time entrepreneur tells us that you've tried you know where the pitfalls are, you have some experience as an entrepreneur, and you're bringing experience as well as ideas to the table rather than just ideas and a vision. So for me, that was very encouraging because I think 5 years or 6 years ago, people wouldn't have been so proud of being second-time entrepreneurs, lest you believe that the first time they failed. So for the space and the challenges, again, it does go back to the talent in the region. The 3 role models you mentioned, Rakan, all genuinely understood and built their technologies. What we're finding is that a lot of entrepreneurs in the region outsource the technology side of a technology venture. So that's a big disconnect that we find. It's, you know, if you have a CTO, your CTO should probably be a co-founder. And they should bring a lot of value to the table rather than outsourcing it to a different company or a different country altogether. So for us, we're finding quality entrepreneurs that understand their own technologies in and out and have the experience is the challenge. But the ecosystem is definitely going the right way. There are more and more people out there. We're finding more innovative and disruptive ideas, not just copycat ideas. So that's also very encouraging and inspiring to see.
Great.
Can I disagree with Waleed?
I love that. You can disagree with all.
Because it's, you know, coming to, you know, like I kind of agree to a sense with Waleed about the entrepreneurs and their lack of experience. But you know, I look at our portfolio, you know, the best entrepreneurs aren't the ones. I mean, I don't think he said MBA. I think you did.
Yeah, I did.
Bigger, you know, no. Like for me, like fine, MBA is an MBA. The worst performers I've seen at, you know, at these stages, the early stages that we invest in, are the, you know, more structured MBA thinkers versus the passionate, more hungry. Like our entrepreneurs, the best entrepreneurs we have are the entrepreneurs that if they fail, you know, they're just not going to find a job or make it anywhere else. So they're passionate, they're hungry. It's our job on the early stage to harness that and structure it to add some of that, you know, gray-haired, even though I still have, I'm still not gray-haired, but add some of that gray-haired structure. And then it's our job to help them hire the more structured, more polished people in the C-level positions, which we've been doing. I mean, a great example is Arabia Weather, which is a company we just led an investment into. And, you know, the guy started the company when he was 16, not very polished from a pure education perspective. You know, had great early investors like the Jabbars and et cetera, who came in and added some of that polish, taken to the next level. We came in right now and we're hiring people across the C-level verticals that are the 38, 40, 45-year-old, you know, I've worked at McKinsey, I've worked in Yahoo, people to come in and add more polish. So,
Okay. So you're saying that, and that's a great segue into our next point anyway. What is the value add that the investors brings to the entrepreneurs? Where is the real, why does entrepreneurs need investors? I've talked off the panel with Nam, and it's either, some entrepreneurs are either innovate or they die in some parts of the regions, which we don't have it in Saudi. The private sector in Saudi is so good that is offering great jobs for everyone and not allowing people to go and start their own companies. But again, let's put it this way, why the entrepreneurs need the investors? It's the value add. And if we can elaborate more on the value add and maybe hear about also your experience in bringing value to the entrepreneurs. Yeah, go ahead.
So, I mean, we actually mapped out the certain areas that we spend a lot of time with entrepreneurs on, and I think Namik highlighted one of the probably the key areas, which we would say is, let's say, HR related, which can mean recruitment as well as structure and culture, advice. The other things that we spend time on is strategy and building partnerships with, you know, helping them with generating leads for business development, or whether it's partnerships for distribution, etc., like, and all those things, as well as facilitating access to further capital as they scale, and engaging with at least M&A activity or interest when the time comes. So if I had to map it out, it would be HR, corporate development, market development, and facilitating fundraising, which can be exits or further capital.
So these are like the basics of a VC firm. Is there like any specific, or let me put it this way, what exactly the verticals you're investing in, Amir, and what is the size of the ticket that you're investing in?
So, okay, we've invested in about 10 companies. We're currently quite bullish on marketplaces, but I think today we're actually taking more interest in enterprise and enterprise SaaS specifically. And content, Arabic content is a big theme for us, as well as mobile, and mobile can mean various things outside of gaming. I would say those are the main themes. We've done investments as low as $300,000 at the seed stage to as much as $5 million at the Series B stages of funding. We are pretty active. When I mean active, I mean we spend, forget about board seats, which we spend on the board of these companies and have quarterly meetings. I think we spend monthly, at least weekly calls, some depends on the nature, but at least monthly calls with the entrepreneurs to address specific challenges, and we're always on call 24 hours when entrepreneurs need us for certain questions or advice.
Great. Naman, verticals and ticket size?
Well, I'll answer your question, which is
The
the
value
other
add.
way, which is what not to do as an investor, and something I see, and it's not only Middle East specific, it's also in the U.S., right? Because to be a VC these days, everyone and their mother wants to be a VC, and you wear, So what makes VCs good, in my opinion? It's one of three things. One, they've built, started, worked, operated, sold a company.
Like core entrepreneurs.
Exactly, right. And our panelist, all the way on the left. She's IPO'd the company at what was it, 1.1 billion?
Yeah.
It's not a joke, right? It's very hard work. So one, she's been through wars. She sit down with the entrepreneur and tell them, listen, here's what I did, here's what we ran into, here's what not to do. Second, our investors who have been investing for a very long time and can see patterns, right? And like Waleed, who's been investing in the region for 100 years. Is it 100?
101 actually, yeah.
101 years. He's seen it before. So you can sit down with a company and say, listen, this has caused problems for us in the past.
If they listen, yeah.
If they listen.
Yeah.
Third is if you've invested in many companies or are investing in many companies globally, right? And you can see patterns that have happened in more mature markets that might happen here, albeit localized, regional specific. Or if you're talking to several companies right now and you're in the market, your pipeline is huge and you can kind of spot patterns and trends. So Pavel, Amir, some of the stuff we're doing in that sector. So if it falls outside of that, like don't go to a board meeting and tell the CEO he should have push notifications on his app. And you have no fucking clue. Oh, sorry, you don't have to curse. You have no clue about mobile. Right? And you've never built a mobile company. So those are the things you should be avoiding as an investor. Just because you have money doesn't mean you're right.
True. And that's the value that you're supposed to bring to these companies. And remind us again for the verticals and the ticket size.
Yeah, so verticals, we're not very thesis specific in the Middle East, to be honest. We're opportunistic just because we don't think you can afford to be. So we've done everything from weird, B2B enterprise like weather. We've done a lot of health tech. We've even done e-commerce and B2C. So we're not really sector specific. Tickets anywhere from 200,000 to 4 or 5 million. So we can do seed. We prefer A, or a mix of seed and A.
Great. Pavel, same. What is the value added in your point of view?
Well, maybe I'll try to give you a generic, my sort of view on the generic answer on the question that you've raised. What's the value that the investor should bring to the business? Probably the generic answer on my side, from my point of view, is that if the investor does not disrupt the business, that's already a good thing. So the first thing is the money. And the second thing, it can vary. if I would tell about our firm, we have a very sort of clear proposition to the entrepreneurs and the businesses that we speak with. We call ourselves a Czech and region agnostic venture firm, but we are very sector specific. So we have limited our focus and try to build our expertise within a very limited number of the business models operating across the globe, except for the US market and the Chinese market. These are the marketplace. This is the B2C and C2C transactional e-commerce. In terms of the particular business model, this is marketplace, lead generation, booking businesses, Uber-like models, and well, crowdsourced business models. It's literally just like four or five models. Sector-wise, we are concentrating within 3.5 sectors. First one is the food tech, everything that relates to food, starting from food delivery marketplace down to restaurant discovery booking systems, home food ingredients for the home cooking, kind of HelloFresh, Blue Apron business model, Instacart business, yeah, everything that relates to the food consumption. The second one is the medicine. The third one is the home services, and 0.5 is the logistics, which is a kind of Postmates grocers maybe business model. So the value that we can bring to the business, to the local businesses, is just our expertise of having a network and understanding of the metrics that similar businesses have in different parts of the world. And to be honest, it was we just started this exercise a year ago, literally just a year ago. It's probably even less. But it was a big surprise to me that these businesses operating like 10,000 miles away from each other have more or less similar issues on the supply side, on the demand side, and on the back end and the product side. So that's the kind of value that we can bring, except for just the cash, right? Understanding of the metrics and the international networking.
Great. And again, the ticket size you're investing is
we are Czech and stage agnostic. We can invest from, I don't know, 100K up to 10 million bucks. Yeah.
great. Walid, where do you see the value added coming from the investors to the entrepreneurs?
The way we add value to our companies? Well, first of all, we've invested in about 29 companies in the past 5 years, and every one of them is different. Okay, we have several software as a service company, several content plays, e-payments, fintech. You know, it's quite diversified within the ICT spectrum, and each one of them, our added value is different on each level. Some of them are Series A, some of them Series B come in. We've done some seed capital, but that's not the norm, that's the exception. So how we help them, first on the analytics side, we try to help them understand their business a bit better, just by purely helping them on the analytics, and then helping them, pivot or focus on what's really relevant. Now, what's great in our company is that we're a team of 16 people, and we have a lot of good resources that can really add value to those companies. And those 28 portfolio companies create synergies in between each other. So in every vertical of the ICT spectrum, we have 3 or 4 companies. That's great to have. And just by introducing them one to another, they learn from each other, and they tend not to do the mistakes that others have done. So this portfolio approach is really beneficial in terms of added value. Now, in the past, we've introduced them to media companies that ended up investing. telcos that ended up investing or taking the deals for telco bundling or telco payments, etc. So our network of telcos and media across the region has helped a lot. We help a lot also in securing second round of funding and a third, mostly from strategics that have great added value and not just financial investors like ourselves. But despite that, I think all of our companies agree that we've added great value.
Great. Walid, I want to ask you a specific question. And I'm sure you've been through these situations before, but have you found that some entrepreneurs in the region, due to the, let's say, lack of maturity in investments, is the role of the founder and the CEO is clearly defined? I mean, we have great entrepreneurs who are great in starting the company, but once the investment comes in, that's where things start to steer away from the founder, or that's where we have some sort of board level decisions that is beyond the entrepreneur himself or herself. Is our middle MENA entrepreneurs coachable and are working great with the investors, or sometimes we still have that Arab DNA thing in us and we fight back and it's either my way or highway?
Well, out of we've seen it all. There is one of the founders we've invested in. We ended up firing him by having coalition within the other shareholders, and I had to replace him for 6 months, and had an interim phase, recruited a new CEO. But that's one out of 28. Again, we've invested about $50 million in 28 companies. Now, and that's really the exception. Usually, we do not interfere in day-to-day. Our role as investors is purely on the board level. We have reserved matters for non-day-to-day issues, okay? Anything not related, like, I don't know, for example, okay, if they want to go for a new round of funding or take a bank loan or pledge a major asset in the company or dispose of a
Strategic.
This is where our role comes into play. We do not interfere in day-to-day. We give a lot of advice in the initial 100-day after we invest, and mostly before we invest, by the way, because if we're not aligned, we don't invest.
Yeah.
But if we are aligned, that's it. We end up supervising a bit, and that's about it. Now, if we're really, really not happy, we just write it off, and we're not private equity players.
Yeah.
We have to focus on the winners, and we do focus on the winners more than on the losers. Thank God we have little losers.
Great. Noor, during your exciting journey of taking a company into an IPO and taking a company into an acquisition, have you faced that with the investors? Have you faced that, tension? And I know about my own business more than those investors knows. And now you've changed sides. So are you seeing it in the entrepreneurs? What's your scene on both sides?
My scene on both sides is one and the same. I think that the biggest failures always come from the biggest egos. So I think the ego is the biggest impediment to success. And this goes from, a lot of people would say, well, how could you IPO your company and sell everything and the family and this? And I said, well, the biggest proof of success is building something that outlives you. And I think that this is really lost amongst most entrepreneurs we come with. I mean, one deal we were very excited about, we signed a term sheet, and 2 days before the deal was supposed to happen, we changed our mind because we found that we were butting heads with the entrepreneur. So it's not that we want to get involved in the day-to-day operations, but when you have, and we're a team of 4 entrepreneurs who've done 8 exits worth over $2 billion. So if you're going to resist every single piece of advice we give you over a 2-month period, you either better have some really good reasons or you're just plain stubborn. We went with the second one. So for us, ego is usually the biggest impediment. As a firm, we come in with investments between $5 and $10 million. We do Series B, and we help the entrepreneurs go from, let's say, $5 or $10 million in revenue to $50 million in revenue. Going from 0 to 5 or 10 is very different to going from 10 to 50 or 100. Our last deal, we put $10 million into U-Turn. So a lot of you might be familiar with U-Turn. But the entrepreneur is someone we can work with. We're going to create value. We're going to grow the company. We're not just here to put our money and watch them work. We're here to put our money and put in our experiences so that the $1 we're putting in can generate $10 of value to go around to everybody and focus on that. So if we can't sit side by side with the entrepreneur and say, okay, here's a problem, and this problem is stopping you from growing 10x in 2 years, you're only going to go 2x in 2 years. This is how we propose to fix that problem. Great. Either take that advice or give us a better solution, but don't sit there and say, no, I accept the problem. So this is our biggest struggle with the entrepreneurs, is the I know best. One entrepreneur we haven't yet invested in, but I like, recently, 2 weeks ago, appointed a CEO for his company. So when he sat with me, he said, I've been looking for a few months, I found this guy, I think he'd be a great CEO. And that came out of left field. Nobody told him to do that, but he knows he has a great business. He's generating about $16 million in revenue, and he's a CTO founder, and he'll stay the founder. That no one can ever take away from you if you're the founder. But what he knew, and he was staring into the face, is that, this is a lifestyle business. I'm already profitable, but I want to be 10 times as big. And getting from 0 to $16 million in revenue, going from 0 to 80 people, is not going to be the same as getting from here to that next stage. So let me hire someone who's done it before. So I think that once he parked his ego and started looking at what can this actual business become, then he hired a CEO. And I commend him for that. I think that's a fantastic step in the right direction to create a big company, not just a little company. And he couldn't have done that if he had hung on to the ego and said, I'm the founder, I'm the CEO. So the ego is often the biggest impediment to success. And we come across it in the region very, very frequently. And that's very unfortunate because there are amazing companies out there run by very inspiring entrepreneurs who, if only they could let go, might have something worth talking about.
Great, thank you, Noor. I think this is one of the best panels that we're getting some really great insights from the investors' world. Ego is a killer in entrepreneurship and in startups. I totally agree with that. We have 3 minutes to wrap up, and I just want to go around. I know there's a lot of entrepreneurs in the audience, and there's a lot of early investors. In your experiences, if you can give some sort of advice to the entrepreneurs. Noor said that going from 0 to 5 is not the same as going from 5 to 10. And those entrepreneurs that when they will come and knock your doors, or the doors of other investors, whether angel or early stage, and will ask for funding. So what is the one single piece of advice that you can give to them? Amir?
Okay, I'm going to try and be specific to Saudi because I think we've seen quite a few interesting deals in this part of the world, or at least this market, that kind of has a consistent theme. And I think focus is something that we find lacking in some of the entrepreneurs in Saudi. I think if they're more focused at attacking one problem and solving that problem and focusing on that particular issue rather than what we've found is an entrepreneur comes to us saying they built one business and it's making X revenue, then they're going to build business 2 because they've already done this one, let's do number 2 and then number 3, and then they come, I need investment for number 3, but I'm going to keep running 1 and 2. That's kind of somewhat of a consistent theme with some of the brighter entrepreneurs, and if they could just focus on one of those problems and really attack that, I think when pitching to investors, I think that could really, it's exciting for us rather than telling us to invest in one out of 3.
So they're expanding horizontally instead of going vertically and growing their one single company. Naama?
Yeah, show up to your pitch in pajamas or flip-flops. I'm kidding. That's absolutely not what you should do. My one piece of advice is know your numbers, right? Because end of the day, like I said, everyone has good ideas. You can sit and say why this works or why this shouldn't work or why this should work. End of the day, numbers talk, right? Your unit economics. If you don't know your unit economics in any vertical you're in, whether it's B2C or B2B, that's all that matters, right? That tells you whether you can scale this business and do it profitably. So, numbers, and I'm not talking about hiring an MBA one of the guys you might recommend.
I did not recommend, I just said the stats.
And building an extensive financial model. I'm saying it's simple unit economics for whatever you're doing that you should know and know how to
How
scale.
to scale. Bible.
I would add that to this unit economics matter that you as an entrepreneur should not only know the numbers but focus on bringing this unit economic into the green zone. It should be positive, at least for the transactional B2C and C2C transactional businesses that we are looking at. So that's first piece of advice. The second piece of advice is apparently focus. That's my personal belief that focus is one of the key factors for the success. The third thing is the entrepreneur shall not be afraid of doing some quick and dirty tests and fails. I mean, especially in the beginning of the road, in the beginning of the journey, it's very important to test many things, to fail quickly. Apparently, you have to cut the losses short, but this is very important. And
Great.
probably the fourth point, the last one. Apparently, you should listen to the advisors, to the investors, to the board, but don't always take the advice that you are getting from the external parties, from the shareholders, from the investors, from the board, for a certain 100% given thing. Be skeptical. Don't always accept this stuff. Sometimes you can get not a really good advice. So please be careful with that. Yeah, that's probably like the fourth point.
Great. So not only he's new to the region, but he also asked him for one advice and he gave us 4. So you know where to go if you want to get extra value added in the investments. Walid, 1 please.
Only one.
Only one.
Because I agree exactly what Paul said. I mean, I talk to smart people, but my advice is focus on building a company and please stop focusing on valuation. Okay, if you get the chance to raise some money, raise it, take it. Do not take half because the valuation is not good enough for you. Okay, so focus on building a company and do not focus on valuations.
Great. Noor?
Wow, something different to all of those. I guess don't confuse fame with success.
Say that again, please.
Don't confuse fame with success.
Okay.
Just because you're in a magazine, it doesn't mean you have the numbers, and it doesn't mean you're going to raise the money.
Oh, wow.
Like, don't confuse fame with success.
Someone should better tweet that, by the way.
It is. That's very valuable. Thank you all. I think we run out of time. Just to wrap up, we've heard about the challenges. Mainly it was focused around talent and getting senior management and C-level. We've heard about lacking of the investment in the seed stage. The base to build up startups in the region needs also to be improved. We've also heard about the value added that the investors brings to the entrepreneurs between corporate structure, between helping them getting access to new markets, preparing them for new markets and for investments and for IPOs and new rounds of investment. And also, we've heard some great advices that we wrapped up the session with. Focus on your business and one single business and one single company, not more than one. And focus on building the company, not focusing on the valuation. We've also heard that know your numbers very well and listen to the advisors. Be skeptical, but listen to your advisors. And we've also heard a great advice that success is different than fame. And I wrap up with this final comments that leave your ego on the door when you go to an investor. Thank you all for a great panel. It was a pleasure to be with you. And I hope to see you soon, inshallah, and I hope you winning investments in 2016 and beyond. All the best.
Thank you.